Hey everyone, this is Dr. Tom Carr, aka Dr. Stoxx at drstoxx.com. That's DRSTOXX.com. I'm just putting together a real quick video here, mainly for the members of my live trading room and live options room. I'll post this over on StockTwits and Twitter as well. Just an update on the market. So we had Jay Powell's speech about 2 hours ago. And during the course of that, he mentioned something about the stock market being overvalued. And that's really all it took for people to start rushing for the exits. We had a pretty sharp drawdown in all the major indexes, in the mag stocks, and in a handful of growth names that we've been following and we've been trading. But there are still some good stocks that are holding up quite well today. So I'm going to go through three things. I'm going to look at the indexes, take a quick look at those along with gold and Bitcoin and Ether. And then I'm going to look at a list of mags. There are some that are really ugly today, but there are a handful, three or four, that are still pretty good. And then I've got a short list of stocks that I think are either ready to go or stocks that we're already in because we're in a bunch of longs in both the rooms, and stocks that are not quite ready to go but are getting there. So we'll show you that in just a minute. Hey, if you want to join me in a great group of traders in the live trading room, you go over to drstoxx.com, click the subscribe menu right there, scroll down to the live trading room. And if you want to add on our new live options room, which had just hit a new all-time high today, in fact, both rooms hit a new all-time high today, despite the market, you can add that on for a 40% discount. Okay, right over to the charts here, and let's take a look at what's going on. Let's start with the S&P. In fact, let me go back to the Dow Jones. So the Dow Jones is printing today. It was doing really well, right? It really shot up to new all-time highs. Some of the lagging sectors, energy, healthcare, utilities, they were all coming back online as money was flowing out. This was early on today. Money was flowing out of the big mag stocks and going into some of the beaten down sectors, which is always a good thing, right? Increase in market breadth. And that was pushing the Dow Jones up quite nicely. The NAS was falling, NASDAQ. The S&P 500 were falling because both of those have a bunch of big tech stocks at the top of them and their weighted indexes. But the small caps and the Dow Jones, which were recipients of some of those outflows, were doing pretty well. But then, of course, Powell came along around 12:35, 12:40 or so whenever he spoke, and kind of knocked everything back down again. Now, the Dow is printing today something that is a little bit of a concern. If you're long the Dow, if you're bullish on the Dow, okay, this may not even play out, but we're getting, if I can zoom in a little bit, we're getting a classic reversal bar. A reversal bar is where you open up within the body of the previous day, or within the range of the previous day, I should say. You shoot north to take out at least 20 days of highs. It certainly did that. This is a new all-time high. And then you go south to close underneath the open and within the bar of the previous day. That usually triggers a multi-day sell-off. In addition to that, we have 5 indicators that are showing bearish divergence. That is to say, price is hitting a high, but the divergences or the indicators are hitting lower highs. So they're not confirming that price strength. It looks like the Dow is ready to come back in a little bit. Now, we did bank a trade we had on in the live trading room in UDOW, which is the 3x version of the Dow Jones, and it hit our raise stop, a profit stop, so we were protecting some profit, and good thing we did because I think that's about all she wrote. Anyway, the S&P is looking a little differently because it didn't travel north initially. It opened, and then it was pretty much of a trend down day from there. A lot of money is coming out of the big mag stocks, and that's driving down both the S&P and the NASDAQ. And I just want you to note on the S&P, we've got 4 indicators that are showing bearish divergence. That's not a good thing. Not that these always play out. Sometimes you get a whole bunch of divergence, and then the very next day it's right back up again. The market can do whatever it wants. But it is a cautionary note. And typically when you get 3 or 4 indicators showing divergence, you get at least a couple of days of playing out that divergence before we get back on track. Here's one that was about 4 or 5 days. Here's one that only lasted a day. So we'll see if it plays out tomorrow. It may or may not. We don't know, but it doesn't look that great right now. NASDAQ is showing just the MACD. Of course, that's pretty important, right? One of the big indicators is showing bearish divergence, and you don't often see bearish divergence showing up in the lagging indicator, the MACD. So that's an interesting thing to note. Um, one positive thing that's going on here is that the volume is a lot lighter today than it has been in recent trading. So not a real big conviction trade coming out of the market right now, but people are moving to the exits. They're kind of slowly but surely taking some profits. And if you see, the Nasdaq is pretty high, right? New all-time highs on a closing basis yesterday. We touched those highs again this morning. It's been all downhill from there, and now we're printing not quite a bearish engulfing bar, but it is a pretty bearish looking bar. And I would not be at all surprised to see this as the beginning of a multi-day pullback. Also, keep in mind, we're in the latter half of September. We're actually in the latter third of September. And the latter half of September, the last 2 weeks, is the most bearish period of any 2 weeks in the market. So not that seasonality always plays out. They're just averages, and the points of data are all over the place. But on average, this part of the year tends to be pretty bearish. Now, the good news is we're going to get pretty close to October soon. And the first 2 weeks of October happen to be one of the most bullish seasons of the whole year for a 2-week period. So we're almost there. Small caps were strong this morning, and that we're picking up some good inflows. You can see this is not an all-time high, but it's very close to it. It's a 4-year high at least. And but you know what I think is going on here in the small caps is that people are finding good value. They're kind of getting tired of the mags. They're a bit overvalued. They're a bit too too all over the place. And they're finding some really good value in the supply chain stocks they're not the big AI conglomerates. They're not the big neo cloud. They're not the big quantum computing names, but they're the suppliers of those things, and they're all here in the Russell. So I think you're going to see some good rotation out of the big cap blue chip stocks for at least a little while, maybe a week, and back into some of the more beaten down names, the names that still have pretty good upside and are trading at lower valuations. Quick look at Bitcoin. So Bitcoin is still a no-go zone for me, but I do like one thing about the chart is that it is coming down into this little green zone, which is a very strong level should be a level of support. It is a volume shelf. We had a lot of shares trading hands in that area not too long ago. It was resistance here, resistance here, resistance here. And so that we're coming back into that green zone from the top. There should be at least, I would think, a hold, maybe a little bit of a bounce, but I really don't think Bitcoin is going to be in play for another couple of weeks. So let's just, it's a no-go zone for me. We do have a little bit of Bitcoin on in our long-term portfolio in the live trading room, so I'm still bullish on it, and I'm sure it will be much higher by the end of the year. But it's just not, for a swing trade, it's not setting up very well. And I have to say the same thing about Ether. I do like the fact, I actually nibbled on a little bit of Ether. I didn't tell anybody in the room, but I did nibble on a little bit of Ether when it dipped below. This is ETHT, which is the 2x bullish version of Ether. When it dipped below 90, because I knew it was right at the 50 periods moving average, and it was, it was a pretty good place of intraday support. So I nibbled a little bit there, and it's doing okay so far. But this is your 2-day pullback. You've got an inside day bar forming, but it's not a green candle. We would like to see the close above the open really to show us some strength. But it is a hold. It's a hold at the 50 period moving average, which is rising. And if we go down and look at the cycles down here, that's what these lines, these colored lines are. We've got the long-term cycle in a nice looking uptrend, and that typically means you're in buy the dip mode. When the long-term cycle gets up here and starts to top out, then yeah, it doesn't always mean that it's because you have shorter term cycles going on down here as well, but you get your best uptrends when the long-term cycle is riding in your favor. And so we do have that as a tailwind at our back. But I don't think, again, I don't think Ether is really set up just yet for a good swing trade, sustainable bounce. Gold is still strong, and it did kind of top out today. We're seeing some bearish divergence. I don't think that's going to play to the downside very much. I am in some gold mining stocks, but I've been in those for a little while. So that to me is still a good sector with still some good upside for the next few weeks. We're in silver calls over in the live options room, and they've been doing really well. No intention of selling. I think maybe a little bit of a dip or a little bit of sideways consolidation because it's had a very nice run and then a new leg higher. Same for gold, same for the gold miners. Okay, and oil. I like the oil energy. Saw a lot of call flow go into energy names. We were long HAL calls in the other room. We're long Gush, which is the 2x bullish version for the energy index in the live trading room. So this whole sector and oil, I think you can just buy oil. You know, just buy the MCL Micro E Mini or buy the UCO, which is the 2x bullish version for oil. And I think you can ride oil higher. Why? Because here is your very firm line of support down here, triple, quadruple bottom. Each time it comes back down, the volume going into the trade is getting heavier. So there's accumulation going on down at this level. We've got a big green stick today, despite the market recapture of the 21 EMA. And yeah, it's got a little bit of work to do. It's got to get above the range. It's got to get above the 50. It's got to get above the most recent pivot high. But I think that will probably happen in the next couple of weeks or so. All right, quick look at the mags. So I've got these sorted worst to best. Oracle is printing an inside day bearish bar. It is a no-go zone as far as I'm concerned. Even if you shorted it for a little bit of a dip below 300, I wouldn't kick you in the pants for doing that. We were in NVDL calls as of this morning. We took our profits on it because this is a bearish inside day bar, which is a rejection of the big green stick. We got in down here just off the 21 EMA. Our calls shot up like crazy, 50% or so in just a couple of hours. And then we gave almost all of that back. We did take a profit, but it was I was a little late on the trigger, thinking it wasn't going to go all the way down. So NVIDIA is still a good buy. I think actually, if you were out buying today's dip, you're doing the right thing as far as I'm concerned. I think NVIDIA, this is just the market's way of kind of allowing the latecomers or the big trading desks to jump on board NVIDIA. NVIDIA will be back up into the low 190s, new all-time highs, probably in 2 or 3 weeks. So establishing a position here, if you're going to do calls, I would go out a couple of months and go up to the 190 strike, or maybe because it's down at 178. I was thinking that more when it was in the 180s. But now at 178, you probably go to the 185 strike, a couple of months of time, and I think you'll see those print quite nicely. Amazon is just ugly, ugly, ugly. 3, 4, 5 days in a row, it's just been on the sell side. It is a total no-go zone, and until we see some greenage on the daily chart. Now, you can drill down to like the 2-hour. I'll show you the 2-hour chart, and you're going to see that at the current level of price, there is a little bit right in this area right here, a little bit over here and a little bit over here. There is some support, some price support. There is a volume shelf right at that level, but man, it sailed right through that pivot low and that pivot low on the way down, and that's not a good look. So let's go back to the daily chart. Oh, I really like Amazon as a long-term play. I'm going to be on IBD Live this Friday, and I'll be talking about it. At least I plan to, unless it gets worse. But I do think that it's a dip. It's a buy the dip opportunity. But my experience in trading is that when you have a big, sharp drop down like this, you don't buy the big red stick. You wait until you get a little bit of a reversal of some kind. Like a little green inside day bar would be great. A doji would be great. A hammer would be best. but we're not there yet, right? It's just a big green stick on heavy volume. So avoid it for now. Wait for it to show some strength. Now doesn't look good, although it is holding at the 21, the 50, but it has broken its little upside, this little relief rally, which wasn't looking that strong anyway. And now it has broken through that. We are short Tesla just as kind of a hedge in both rooms. We've got shares of TSLQ in the one room and puts on Tesla in the other room. Why? Because it printed a reversal bar yesterday. We've got bearish divergence a couple of days ago, not a whole lot, but some. You'll see a little bit more on the intraday charts. And a reversal bar yesterday and a big, ugly, bearish engulfing candle today. Now, the one thing about Tesla here is that, two things rather, is that today's volume is pretty light, so there's not a lot of selling going on. And the option flow, although it's light on both sides, calls and puts, still more calls than puts today. So people are still bullish on Tesla. The guys who do the big option trading are still bullish on Tesla. Just looking for a couple of days pullback. Maybe we get a dip to around 400, and then we can get out of our trades. All right, there are a couple of mags that look pretty good. Facebook is coming down into the 50. It's not a buy just yet because of that big red candle, which follows a big red candle, which follows a red candle. Let's wait until the selling stops, shall we? But I think it's going to tag the 50 and give us a reversal bar like that one right there or that one right there. When you see that, you can go long for your swing. Microsoft looks okay, but actually looks a little worse now than it did when I looked at it an hour ago. We are below the 21. Here's your wedge breakout, but instead of going up, it went sideways. That's kind of a, it's not that great. But then we had this huge, this was Friday last week, to close the week, we had this huge green bar. There was news out about something. Was that the Intel news? Anyway, there was news that the market really liked, massive volume coming into Microsoft, but that was it. And then it just kind of petered out. And then with Powell's comments, it's getting even worse. We're down at the bottom of this little range. So if that range holds and we get back above the 21 with a green candlestick somewhere near the pink zone, I think then it could be a swing trade, but it's not there yet. All right, I'm going to show you a few others on the greens list. So I have some shares of this guy, PHAT. It is a little microcap biotech that has a lot of interest from my pro trading group. They're all buying shares, they're buying calls. There's been some good flow. Last week, I haven't seen it so much this week, but some good unusual call flow going into this name. Big breakout move, at least I shouldn't say big breakout, but breakout of the recent range above the 21. Got pretty close to testing the 52-week highs and then recoiled with the market. So I suspect as long as we stay above the range or near the top of the range, this one is a go and likely breaking out of that resistance line right there. VSAT is not quite ready to go, but it is very close to new 52-week highs. Had a reversal bar yesterday. Looked very good this morning, but like everything else, has come back down. Keep an eye on that. We're long UNH in the options room. We've got some calls on UNH. They're doing like crazy because we bought it yesterday near the lows, and now we're up here a fair bit higher. And calls on UNH, the implied volatility just expands when the price is going up because everybody's jumping on board because it's such a great trade, right? Such a great trade. We had a nice trade on in the live trading room. We bought it down here, we sold it up here, and it has now since pulled back. And then we got on board again with this nice little pivot reversal. The long-term cycle is down at the lows and starting to curl higher, and everything looks good for a test of maybe 400 coming to a neighborhood theater near you. We're long MP calls in the live trading room. Nice little breakout, big green stick, big volume the next day, holding above the resistance trend line, and that's always a good thing to see. We've got the stacked MAs as well, good volume coming in. This is a materials play. So I think, you're kind of moving away from blue chip tech. It's what the money flow is telling us, and moving into some of these names that they're not laggards by any means, but they're just not, they're kind of, they're not on the radar of everybody. So they're getting some new attention now from people that haven't been in it before, and that's always a good thing. We have this little nuclear play. You know, Oklo was way up, NNE was way up, some other names, CCJ is way up. So nuclear is a big theme right now, and those guys are actually holding up pretty well today. This is a more of an under the radar, but it is a company that makes nuclear reactors. So, and they also own a few of them, and so they're selling the nuclear energy as well. It's a really cool play. I like it a lot. It's just now starting to get some good hedge fund and investment analysts getting on board. This one has a really good forward growth rate, and I like it. So this to me is actually an investment grade kind of product, not necessarily a swing trade, but we're long in the live trading room regardless. CRWV, I think, is a good future play. Earnings right now are not that great. The growth right now is not that great, but look, they've got NVIDIA as a backstop. NVIDIA has just inked a deal 10 years, or is it 8 or 10 years, I forget, where they will buy the excess CPU capacity that CRWV produces if they can't sell it to anybody else. So that's always the concern about these guys that are kind of a service as a service sort of thing. And if you can't, if you can't find new customers and the demand goes down, you've got some risk. Well, if NVIDIA is backing you up and they promise to buy everything you can't sell, there's no risk, absolutely zero risk. So I really like this longer term. They've got deals with Facebook, they've got deals with OpenAI and Microsoft. So they're in really good shape. DataDog is a pattern play. I'm not so sure I know Kathy Wood likes it. It's not so sure the fundamentals are supportive, but it is a continuation pattern of a nice looking uptrend off the April lows. We're just kind of waiting for this above the 21, above the 50 to break out and get a good squeeze going. One more. So Snow is still in pretty good shape. It's above the 21. We're long this one somewhere, I think. Maybe not. Maybe we're not long anymore, but it's forming this little, if I can get my little brush out here, a little bit of a continuation, head and shoulders. I think that's kind of what's happening here, just as a pause. The pattern that got us into the trade was the break right there on that big green stick on very good volume last week. We got in just above the line, and I think we're in the calls. And a Rocket Lab was one that hit our target today. So we bought it down here on the 21, and it hit our 54 price target. It should continue higher, but it got some kind of a news thing. I don't know what it was. And it shot right up, hit our target, and we're out. So it's actually a little bit lower than where we got out, so we could buy it back. But, I'm just kind of in that place where I'm looking for a little less risk right now than more risk. The last thing I should mention, AVGO, is your best looking mag setup. So you've got the big power gap on earnings, hasn't come close to filling in. Went on from there to hit new all-time highs, has pulled back very gently into the rising 21. We're looking for a green bar reversal on decent volume to get back into this guy. All right, guys, I'm going to let you go. God bless everybody. Have a great rest of the afternoon. I'll see you back on the trading floor in just a little bit.